Spread betting strategy, phased entries and exits. Spread betting is very flexible in that it allows you to enter positions a bit at a time, and this allows you to close part of your bet and keep the rest running. You sometimes hear traders saying they treat spread bets the same as the normal share dealings. Well, some spread bettors don't. One big advantage of using spread bets rather than actual share purchases is that one can make phased exits without incurring duplicated or triplicated broker fees. This can have tremendous psychological value. You see, with spread betting, it is perfectly feasible to phase your way into or out of a particular bet in £1 per point increments. £1 per point is the equivalent of buying or selling 100 shares, which is too small an increment to be viable if repeatedly applied to a real shareholding. You could, for instance, determine beforehand that you will sell 1/3 on a 10% price fall, another third at 15% down, and only sell the remainder if the price is 20% down, or using 5%, 10%, 15% or whatever. You can thereby feel that you have been fair to that stock and given it every chance to rebound. Whereas with an actual shareholding, the avoidance of multiple brokerage fees means setting a fixed level at which you either sell the lot or don't. That all or nothing moment is where many investors get stressed and come unstuck by feeling they really ought to give it one more day, only to then find themselves tipped into a sharp fall triggered by other market participants who did sell. So how does this strategy of entering and exiting positions in tranches work in practice? Consider that you may have a winning position, but you are unsure how far the profits will rise. You do not want to leave the whole position open, worrying if the price will reverse and take all your profits away. But you would still prefer to continue running the trade and extract more profit out of it if it keeps going in the direction you anticipated. The answer is to close part of the position, locking in some of the profits while still holding an interest in the trade in case it continues to climb. Say, for example, that you initially spread bet at £10 per point. Buying the position, you could now sell £5 per point, closing half the position and locking in the gains. If you now raised your stop loss level to your initial trade entry, even if the price fell back to the beginning level, you would still have a decent profit locked in. Unless you pay extra, stop losses are not guaranteed, but you should retain most of your gains with this tactic. Another tip is to enter a position in parts too. You might use this if you think you have missed the ideal entry, the lowest level, but are not sure if the price will return to the support level once more before surging upwards. If you take up the spread bet trade for half the amount, if it keeps on going up without returning to the support, at least you have a position without risking losses. If it does return to support, you take up the other half of the spread bet building, a position for a lower average entry price. If the price does keep climbing, you could also consider taking up the second half of your bet. Granted, this does increase your average entry level, but at the same time, you should have better confidence that the price will continue climbing. Likewise, if wanting a big stake, you could split it into smaller parts with differing auto stop losses on each tranche. That way your exposure gets reduced on initial blip, gets reduced further if it fails to recover, and only gets fully shut down if something serious is happening. Some firms also allow counter bets, so if not wanting to get out of a long-term bet during short-term contra move can force open an opposing bet for a brief period. Remember that emotions such as greed, fear and hope can cloud your judgment and cause you to make irrational decisions. Fear will block you from taking a position, but greed will prevent you from making a profit. Phased exits help to take away the hold or dump pressure that sometimes afflicts traders if looking at the entire holding.